So as brokers face a tough competition, a shift in regulatory environment, and decline in volumes, there is a need for a critical look on their business models. As some of them are forced to downsize their activity, and others are considering M&As. Our lineup of thought leaders will delve into the efficiency of the existing practices and will reconsider the prejudices on what works and what's not. Happy to present Stephen Chazakis, Global Director of Research of Forex and Crypto at forexbrokers.com. Stephen, please.
My fellow panelists are joining me in a moment, and we're really excited about this panel today. The title, speaks for itself, so it's a very ambitious panel. We're going to try our best to deliver on it. But obviously, everybody wants to reinvent the wheel, so to speak, but at the same time, that's very risky. Because if you don't get it right, it costs money and time. So we're going to try to talk about some of the existing things that work, and then the creative things that people are trying to do across various categories that are important. Can you all hear me fine? Good? Okay, great. Excellent. So I know we're limited for time, given that this is a pretty quick panel, so I guess we could skip introductions. You see everybody's name and title and company on the top, and of course we'll be available later for questions. So I guess, we could dive right into it. Thank you everyone for joining here as well. And I guess to begin, I thought to mention how, every broker has a different range of products, operates in different jurisdictions, and has different regulatory licenses perhaps, or sometimes they don't. Obviously there could be pros and cons depending on where they are. But I wanted to talk about the range of markets that, vary across different broker offerings. Some brokers might offer a few hundred products, some a few thousand, some over 10,000. I know earlier on the CEO panel, they mentioned about how multi-asset brokers are constantly increasing their product offering. And I think this is still a valid, important theme to discuss as, companies try to reinvent, their offerings. So I guess the first question I have is, what is the minimum viable offering that someone needs to be able to compete? I guess I could pass this to you, Nikolai. From what you've seen on the various brokers that you interact with, what is the minimum that's needed, and what do you think is needed to reinvent the offering?
Stephen, thank you for the question. I think it ultimately comes down to flexibility, I think, in the sense. There are many, many jurisdictions out there today where a broker can go and register and essentially abide by some kind of rules and regulations. But I think that, frankly, the major jurisdictions today that we all know are a bit overwhelmed with the requirements that they're seeking from brokers, the reporting that's required and things like that. It creates a lot of overhead, it creates a lot of operational work, and I see that in some ways it's actually detrimental to the broker. And so I guess to answer your question, there are many different options available today, both what we would call onshore and offshore.
So do you think having a combination of both, like maybe having a top-tier license in places like the UK or another top-tier jurisdiction, along with some offshore locations, would be the MVP to balance out the offering?
Yes, that could be a very good possibility. It obviously depends on also specifically which regions the broker is targeting from a marketing and sales perspective. And I think that customers themselves are being more and more receptive to brokers being in jurisdictions that they were not previously in. So we have sort of the gold standard with the NFA in the United States, the FCA in the UK, and Australia, and so forth. But there are other countries that are emerging as viable options for brokerages. So on the one hand, you can maintain a gold standard license, and what you can do is you can take your experience with that license and apply it elsewhere to maybe a different jurisdiction where the rules may be more lax.
Sure.
But you already have experience working with, a reputable regulator,
right,
and you
can
apply those best practices
Excellent.
there as well.
And while I don't want to make the theme too much on the regulatory side, I wanted to segue from that into, again, the product offering. So let's say you have a couple of licenses in various jurisdictions. What's the sweet number of products that you have to offer? And feel free, you know, Nemo or Nikolai, if you guys want to try to tackle this one.
Thank you, Steve. Welcome, everyone. Look, from a sales perspective, I wouldn't say that there's a specific number of products that one needs to offer. I find that for brokers that don't have the ability to have any differentiation amongst other brokers, they like to have as many products as possible. This is a way they can advertise, or their unique selling point is 300 plus tradable instruments, something along these lines. For the most part, though, my personal opinion is, as Nikolai said, for trying to target new markets and open up new markets, having local products, let's say Nifty 50 for India or some local indices in European Union countries, for example, allows you to open up those markets and attract more clients.
What about the single share CFDs? I think those are, you know, starting to become more popular alongside Forex broker offerings and across various countries. So, but at the same time, there's a lot of costs sometimes associated with offering all those, you know, whether it's exchange data, clearing, settlement, you know, on the risk management side. So how does a, you know, what's an MVP offering look like, and what's a new way to maybe approach that that's more cost efficient, where the broker could still end up making more money maybe, but still meet the client's needs? Like, where's the happy medium?
Well, I wouldn't say there's a sweet spot per se, but I'm finding that more brokers are looking to have the single shares, simply for the fact that from a psychological perspective, you know, everyone is aware of the significant risk in the markets, and trading stocks or shares seem to have a little more stability, let's say. However, from a broker perspective, depending on the strategy, if they are, let's say, an A-book or a market maker, they may not want to offer as many of these shares because it's less revenue in their pocket at the end of the day.
Right. And Albina, have you noticed many brokers demanding a larger range of markets in, you know, the platform solutions your firm offers, or from their clients demand for different products beyond the, you know, basic?
Before answering that, I would like to comment on the different offering that you can give for clients. You asked about the number, the sweet number that you can offer for clients. I think after maybe 300 or 500, it doesn't matter anymore. People just see that it's a lot, and 300, 500, 600, it doesn't make any difference anymore. But as a broker, what you need to, depending on which market you're focusing, you need to choose, or you actually need to do research and need to know what different assets and instruments are traded more in that specific region, because people trade with assets that they know about. So in some countries it's gold, in some countries it can be oil, all of them trading with their local currency because they know what is happening with their currencies or with their neighbor currencies. So you need to have this. Everyone knows that there are major pairs that are more traded, and then specifically depending on the instrument, it's switching from one market to another.
Right. Excellent. Shay, do you have comments on that?
I'd just like to add on what my colleague said earlier, and going back to your question of assets or popular assets or sweet spot of an amount of how many assets you should have available to your clients. I think it depends on what kind of clients they are, but I think I completely agree that sometimes too many assets, client is overwhelmed. So again, this panel, I can talk from a technology side as the CEO of Airsoft. What we try to do is kind of help the end client, like one of my colleagues said best, and the geo that he's coming from, to better find, you know, those assets. So I mean, if we have a client that we know is coming from a retail client, so he's coming from an IP of South Africa, like he mentioned, we're going to make sure that, you know, the first assets that will pop up will be the big equity names or the index.
So it's personalized, local,
IP,
geo-targeted,
et cetera, sensitive. So sometimes, you know, when you do it like that, then you're not going to have 300 or 400 assets. You might have maybe like 50 to 100, but the end client, the retail client, is better identified with those assets. So it kind of, so that's like the sweet spot. The sweet spot is not necessarily quantity, but more quality that, you know, those guys can relate to. There's some people in, for example, in South America, they've never heard of, I don't know, SAP or some big, I don't know, German names. Nothing's coming up to me right now.
I think I get your point, because
now I'm after a couple of gin tonics. I'm sorry. So, but you know what I mean. If you're talking to guys from South America, they don't know the big Asian names. So you really have to kind of geolocate that, help them, because when they feel comfortable with the name, they feel comfortable trading. They feel comfortable trading. It become more, you know, they like the platform. They come back, and that's really the key.
Right. I believe there's a dilemma that if brokers, want to offer a particular, stock or share, they need to sometimes include the entire index, or, they have the whole list, but clients might only be trading certain symbols, and then they have all the other potentially thousands of symbols that might not get a lot of volume. So I understand. What do you think about more education and research being pushed to clients, again, personalized, about maybe some of those symbols that they would not otherwise trade, but do it in a way that's related to news and related to their personal preferences? Is that something you think can be a disruptor for getting more volume across these other assets, in an FX portfolio?
I can. As we see from our experience, from the brokers that we're working with, those companies that really putting all the efforts and their strength to educate traders, to include new assets, to perform better, to build better strategies, they see the results. Of course, not immediately. It takes them like 6 months. It could be 1 year. But if they do that constantly, like once a month, they have lectures where they educate people where they represent new assets to their professional traders, for example.
So create content around create content around the various topics or symbols or sectors.
Yes, exactly. To explain what is this about, how it's traded, how the price is changing about this specific instrument or this set of instruments. So that's paying off, and I think with all the changes that are happening on the market right now, that's the very right and maybe the only right way to change the model, because now brokers really need to attract professional traders and to care about their education and how they can make them better as well.
Right. I think we've been talking about education for so many years on how it's so important, and it seems like a recurring theme. And everyone always thinks that it's going to solve the problem and that it's the magic bullet. But I feel like maybe it's transferring into a UI, UX challenge of the customer journey, and whether you're integrating platform tutorials into the platform, or making it easier for people to figure out, because these platforms sometimes are very complex. What are your thoughts on that challenge in terms of bridging the gap with the educational side, versus just creating educational videos?
Yeah, well, going to what you were saying with the education, it's become so cumbersome. This isn't 2010 anymore, where we need to be educating people on technical analysis and economic indicators. I find the main area where there isn't much education available is, in essence, addressing the elephant in the room, educating people on the risks, letting them know how easy it is to lose money, letting them know why people lose money, which in my opinion has strictly to do with psychology of trading. So letting them know about risk management, psychology of trading, etc. As far as I'm concerned, if someone can Google it, I don't want my marketing team investing resources on talking about these things. Let's invest in things and our resources on things that aren't addressed and that most brokers aren't talking about. I find that most brokers don't want to embrace the fact that most clients lose. And by doing so, by addressing it and speaking about it, I believe you also gain a little more credibility that you are being transparent and open with the client.
If I can add also, again, you mentioned some of the thing about, again, the client, his experience on the trading platform. All of us here at these conferences, well, market professionals, and on a daily basis we see trading platforms, or even, education platforms, etc. For us it seems trivial and everyday things, but for the common person that comes in, again, depending if it's a professional, non-professional, more maybe in the non-professional straight retail clients, they're overwhelmed. They might log into the first time, and it doesn't matter from what marketing channel he came into the trading platform, but he's overwhelmed right now. Most people don't have experience. That's where the education comes in. But even that, I think having like maybe a web trader and like a professional trader, sometimes it's something very simple like a chat, on the trading platform. Just that, to make the person feel comfortable to ask a question, on the trading platform, the education side doesn't need to be a very sophisticated, library with videos. Can be just, one-time things, or just a kind of social trading or some copy trading, just to get the person, feel comfortable. It's just
Make
about-
it easy for them to use it.
It's just at the beginning of the comfort level. If you get that trust with the client that comes in, then you get a happy client. And again, it goes back to the topic of this panel, the new retail business model experience. Because at the end of the day, costs are going up, and it costs you a lot of money to bring this particular client to this point. You want him to stay.
Right.
And sometimes it's very simple technology tool just to make them feel comfortable. You're looking at the platform, you can just we do this a lot, just like with the mouse, if you just hovers over a certain function, just a little pop-up, small cloud windows, and this is what happens.
So small improvements to the UI and the
Exactly.
platform.
A lot of money is invested in the UI in order to make the client feel comfortable,
Right.
the client have a longer, call it shelf life, trading experience, and more profitable at the end of the day for the business.
We see a lot of crossover between research and education. From the brokers we cover on our site, and I feel like these are kind of merging, where you might be consuming some research, but you're learning about it. About that subject, during that process. What are your thoughts on different ways brokers or providers are approaching kind of reinventing that way of how they deliver the research for consumers to consume it, within the platform, but at the same time make it easy for them so they can understand it and learn it?
Well, Steve, if I may, I think when it comes to research, you can take a look at different brokers and see that in some ways some of them are actually creating individual brands based on their research offering. Obviously, some companies invest a lot of time and money into that. They'll have an in-house research team. Obviously, others outsource that kind of product. And I think for the ones that do research in-house, they almost have a following, from a customer base, or even just people that are just interested in the markets but might not actually have a trading account right now.
So there are Twitter personalities, or
Yeah,
there are
exactly.
people that are on TV often, and
and I think we always need to remember about shifting demographics, right? We're talking about millennials, we're talking about new participants coming into the market who, we're not that old, but at the same time, these are younger people. They are very quick on their feet. They're very quick to understand maybe some technical things that we might not have at their age. And they're very demanding in the sense that they want the technology to work fast. They want whatever transaction is taking place to be lightning quick. And if it's not, essentially, they might consider that to be an inferior product or an inferior service. Going back to the research part, with companies that invest quite heavily into research offerings and things like that, you can see people using a lot of interactive media. So besides Twitter, we're talking about YouTube, we're talking about weekly, daily seminars where you can connect to a person from anywhere in the world and see them live on the screen, and they would explain to you, exactly what their trading strategy is, what they're doing, and things like that. And if I may, to comment on the previous question that we had about different product sets and things like that.
Right.
Like single stock equities, CFDs, I think are becoming more and more popular, not only because you can kind of say that the costs of trading those products in the CFD format are, it's less costly than actually going to an E-Trade and
Right.
buying actual
Well, now
stock.
with the commissions going to zero in the U.S.
Yes,
in the U.S. equity side, I
Yes.
think are you saying that's starting to reverberate back to the FX and the CFD industry?
I think so, yes, absolutely.
Even if they're not yet passing those costs on to clients because they have their settlement costs in there because it's a foreign transaction. So
I think what Interactive Brokers did was a big surprise to everybody, at least in the very beginning. And to see everybody follow suit, I mean, well, they had to. There was no way of still keeping at least some types of accounts with a commission model, and then having to offer zero commissions as well.
Thanks for sharing that. That's an excellent point. Earlier, I remember, I think on the CEO panel, they were talking about fees, and commissions and fees is obviously a big differentiator for brokers. Everybody wants to offer the lowest spread. They advertise minimum spreads. We like to look at the average spread, typical spreads that brokers will usually measure over a specific time frame that's attributable. So during that period, the spread was X. Even though it hasn't been standardized, what are your thoughts as, as spreads are getting lower and lower, how can clients tell the difference between where the best spreads are, and how important is that for clients? Do customers care that much about the spread, or is it more from a marketing side? And obviously, if you're trading a lot of, many yards per month, every tenth of a pip makes a big difference. But is it that big of a deal?
I would say that it is. What we've seen in our day-to-day is that what I call customers being more price sensitive. So essentially, they do look at the pricing that's being quoted to them. They also understand, with some of the regulations that came into play in Europe recently, with ESMA, RTS reports, all the requirements that brokers need to do today in those regulated environments, it kind of also, I think, gave the traders a new perspective on this type of stuff. And when I say that they're price sensitive, they will trade. They might want to actually check their pricing and compare it in a live format, so essentially in real time, because these kind of tools and technologies already exist today, and they can be implemented, quite easily at any retail brokerage. Or they will double check, retroactively. They'll come back later and just go and try to compare what prices they got as to other brokers, liquidity providers, and things like that.
At that point in time, like a snapshot across the industry, and
yes, and that's becoming I think from a fintech perspective, and maybe Albina will agree with me. From a fintech perspective, there's a few companies that are emerging that are specifically catering to these types of needs. So on the one hand, you may have a regulatory requirement to be very much more transparent with your pricing. But on the other hand, if you already need to do that, then why not be more transparent with the customer themselves and do it proactively and upfront?
Right, that's a very good point. I think as the spreads continue to come down, potentially, as this trend of commissions going to zero, price going to zero, how can brokers reinvent themselves to make money, if they're not involved in other lines of business, maybe where they could afford to take that loss? What's going to be the differentiator? If the spreads are the same everywhere, how does that change how firms have to try to rethink that? And this is open to anyone.
In terms of spreads, again, going to the experience in different countries, some countries, especially in Asia, Japan, for example, their traders, they accept that they expect spreads to be very close to zero, but they agree themselves that they are paying the commission, so they separate the things. While in other countries, they see that they shouldn't be charged any commission for an order. They expect that commission should be included in the spread. So you need to know the market, what is this market about. But if we're talking about European regulated companies, you are obliged to give the best price that you have for traders, and you are obliged to give this information to the trader when he asking about that, and you are obliged to save all the information of all the prices that you had for the last 3 years, because trader can come back to you at any time when he has a question, and you have to answer. And I think it's a good move to be transparent towards all the participants of the market. And from the technology point of view, we spend a lot of resources, of course, to track how much time it takes to execute the order, what was the price difference, was it because of the liquidity provider, and if it was more than average change, we need to go deep into that and understand what was the reason. So
excellent. That's great feedback. How can brokers manage to make money in an environment when the prices are coming down, or they have to have those different account offerings, like the commission-free where it's spread only versus the commission-based model? And what about the different execution methods? Because sometimes you'll have, the spread only might be like a market-making offering if the broker, is involved in market-making, versus just the agency only where, they need that volume to make money on the commissions.
You need to have different liquidity providers and to manage these partnerships in a good way in terms of how you execute. Because if you're giving the best price at the market right now, it could be for like opening and closing position, it could be different partners. So to do this internal risk management, how to work better with each liquidity provider, because we should again reconsider the costs, and sometimes the pricing that you have with the liquidity provider, it's not only on these charges, it's all possible, like swaps, the position.
It sounds like some of the best practices you're talking about that are now also regulatory requirements, like in Europe, are starting to trickle down to the end users. I guess maybe the Bank for International Settlements with the Global FX Code has also had a role in best execution, getting the best price. Nikolai, are there any thoughts you'd like to share? I know at your company, you work with a large range of brokers, some of who might not be regulated in major jurisdictions, but are with your self-regulatory membership organization. How do they adhere to best execution? Is the Global FX Code something that you think is an influence for them, or what approaches are they taking to reinvent how they provide the best price?
Well, I think the majority of brokers that I deal with, I think they are getting this impression that they should be more transparent, more open, and explain to their customers up front how they're actually executing their trades, whether it's market execution, instant execution, whatever it may be. And how the pricing is generated and what kind of spreads they're getting, because the customers are the ones that are looking for that feedback. Again, going back to my previous point where the customers are more self-aware, right, of what their costs are of participating in this market. And so they will, oftentimes, I will see that the customer, before opening an account, a live account, they will inquire with the broker to ask some difficult questions sometimes.
Right. If I may, you work with, you deal with complaints that are sometimes price related.
Yes, absolutely.
How like investigating a price complaint, how does that usually play out, and how is that affecting brokers in terms of how they operate their order execution policies?
Well, it's a great question. Like I said before, there are certain technology solutions out there that are independent of any brokerage per se.
Okay.
Some of them are completely free, some of them are paid services. And we basically employ some of these tools to get a snapshot of the market at any particular millisecond in time in the past, obviously, to basically identify where the market was. If we're talking about situations where there might have been price gaps or extreme movements in the market, we can essentially compare and see whether or not the prices that the trader was trading on, whether it was an order that was executed or he clicked buy or sell, how those prices compared to many other sources,
right,
including liquidity providers, other brokers, anonymously, and things like that.
Do you think it's, I'm sorry, continue.
And it gives you a straightforward snapshot of what happened in that moment in time.
Right.
And then considering the way our dispute resolution works, we have an independent panel of experts who would take all of this information that we've analyzed, and they would essentially, compare it and judge it and kind of, give their best honest opinion on how they think, whether or not the trader's in the right or the broker's in the right, and things like that. So.
Excellent. I have another question that's a follow-up to this, open for anyone here. Nima, perhaps you'd like to take it with regards to the pricing that brokers have to publish, not just the real-time data, but let's say average spread data, for example. Do you think it might be a regulatory requirement, or at least like the regulators might standardize a little bit more in terms of how you advertise rates, beyond the little disclaimers of, X percentage of clients lose money, like the ESMA related, or in the US, the NFA related disclaimers, in terms of average spread data, I mean, do you think this is something that's important? And do you think regulators are going to make it, a requirement where brokers have to follow a certain procedure to populate those numbers?
Well, I mean, in terms of average spread data, I think it's very important from a trader perspective because the spreads that you see online or what they're advertising, this 0.1, 0.2, Euro USD, et cetera, this is not what they're executing deals at. And in most cases, when there's times of volatility, which is times of opportunity, the spreads obviously widen. I could only see it in places maybe to start with, in places like, let's say, the US or the European Union, where brokers are required to report the opening and closings of every trade on a end of business every day. But in all reality, where in these emerging markets, even the regulators themselves are just so in the Stone Age. I mean, let's say you look at the FSCA in South Africa. I recently got a license there, and they don't even have any investor compensation protection, anything along these lines. So they'll get there, but in those cases, in these developing markets where the regulators are still, as I said, in the Stone Age, the clients don't even really know about these things. You know, they're more concerned with making eye contact with their broker, knowing where their money is going to be deposited, hopefully locally, but they're not so advanced yet where these type of questions are coming up. Advanced markets, Japan, as Albina said, or Europe and the EU, obviously the broker or the trader is far more advanced, and these things are going to come up, and as far as I'm concerned, it's of utmost importance.
Do you think a lot of data is kind of there, but nobody's mining it from some of these regulatory governmental organizations, where maybe some fintech company can run some AI on it and provide more analysis either back to the brokers or back to, I know there's several regulatory reporting companies already in the reporting business, but could there be hidden data there that, again, brokers are providing to the government, but the traders aren't really getting the benefit of that data?
Well, Steve, I would say that these questions that you're raising are nothing new in the sense that if we take a look at U.S. Forex brokers, specifically United States, they proactively started doing these kind of things like at least 5 years ago.
Right.
Because I think they realized, well, we have the data, we're sitting on it, right? We know how many limit orders had price improvement in the last month, right? We can judge and see how quickly our trades were actually executed, in milliseconds and things like that. And you can see that some brokers just proactively did it themselves.
So
without any regulatory requirement.
Right. So we have enhanced, I think, disclosures in the UK, in the EU with MiFID II, where brokers could provide that extra data you're saying. Is that very important to clients? You think that that's a differentiating factor, or it's just kind of another check mark on the integrity side of, oh, this broker has terrible slippage or whatnot? Or
I think it should be mandatory. I don't necessarily think that maybe regulators are going to require brokers to do that, but I think that for brokers to, again, be transparent and basically also have a competitive advantage, especially if, like we said, in more advanced jurisdictions and regions, the customer understands a lot of these things much better than people in other countries do. And it could offer you a competitive advantage as well because, if you are going to show your customer on a monthly basis all of this information publicly before he even opens an account, and another broker or competitor won't, we could argue, but I would venture to guess that customer would be more comfortable opening an account at their brokerage, which is proactively giving him all of this information.
Anything to empower the customer with more information in a way that's easy for them to digest. I know we've covered some of these key categories. I just wanted to jump back onto the, as far as creative ways companies are trying to reinvent their business. Do you think the crypto space now with decentralized exchanges, trying to provide the traditional brokerage services, well, some of the brokerage services that you would see as far as being able to access an order book and trade with a P2P counterparty, do you think that that's a threat to the ecosystem if some of these DEXs could truly be decentralized, where even a government regulator couldn't shut them down if they were censorship resistant? And could they potentially acquire a lot of assets under management even if it's non-custodial? Is that something that 10 years from now could be a reality, even if it's early now?
I think
it's two different markets, and from the clients that we have, we see the brokers succeeding with the crypto models when they are completely separate from other type of assets. I think the audience, at least for now, the audience that are interested to trade in cryptos is not the conservative or common traders that we have trading on FX. We see, contrary, the brokers that have a good FX offer or other offers, when they add cryptos as a CFDs or just as a even deliverable crypto, if they have MT5, let's say, they don't see that big volumes, except for the times when Bitcoin is going up double.
So do you think these themes of decentralized finance or open finance, is it something brokers should start to try to adapt more or push away and say that's a different business?
If they're not ready to invest into that completely different team, they shouldn't start that because it will not go well. If they want to add crypto, they need to consider that market seriously and see it as completely different offer, not expecting to offer it to the same traders that they have and to see the increased volumes or something else, because that's not working.
Right. I mean, some of the largest brokers out there that have, billions under management, it took them very long to get there. So, but with technology, that could all be disrupted, perhaps. Does anyone see any type of trends emerging, or is there any predictions you'd like to share on things you think could disrupt that, where volumes and, assets would shift?
I think this question goes back to your previous question. I think, first of all, crypto is a reality. You're talking about Forex brokers or financial institution. It's a reality. If people still didn't understand that, there's something wrong with them. I mean, we've been part of this conference for the last 5-6 years. 3 years ago, nobody really spoke about Bitcoin and crypto, and today it's more than half the floor. So it's definitely a reality. It should be part of people's business model, business plan, one way or another. And if it's not, then probably in the next couple of quarters, but definitely in the next couple of years. And I think, again, it comes back to technology driving the market, technology is driving, client needs, and it changes. I mean, I remember when I first started in the Forex industry, and yes, I am that old, there was no internet, there was no email. We used to send faxes, and then when somebody said, hey, there's this thing called internet, they're not going to need that guy on the phone and he can trade himself. Everybody said, oh my God, what are we going to do? And, things evolve and change, and it is technology. And I'm very excited about the future. I think that somehow, and we're already starting to discuss, it's being discussed at a regulatory level, obviously on a business level, how the whole blockchain world is going to meet the finance world, and it's inevitable that it's going to happen.
So,
unfortunately, we're out of time.
No worries.
And then some. So, thank you. Let's wrap it up.
Do we have any time for questions, or we're
not
finished?
at all.
Okay. Sorry, we went over well. We'll be available to answer any questions afterwards on the floor.
Thank you.
Thank you, everyone.
Thank you.
Thank you.